Okay, I'd like to introduce now First Cobalt. Speaking for First Cobalt will be Dr. Frank Santaguida. First Cobalt is the largest landowner in the Cobalt camp in Ontario, which interestingly is the home of the Northern Miner. That's where we were first founded over 100 years ago. The company was formed in early 2017 with the vision of creating a pure-play cobalt company offering investors exposure to the cobalt market. They've since completed a three-way merger in December to become the largest market cap cobalt exploration company in the world. The company controls over 10,000 hectares of prospective land, including 50 past producing mine, that's 50, a mill, and the only permitted cobalt refinery in North America. Please come to the table.
Thanks a lot for that intro, and thanks very much for allowing me to speak this morning to talk about First Cobalt. I'll talk a little bit about, again, our historic cobalt camp, and I'm going to talk about our more recent merger and acquisition that we have going on in Idaho, in an aptly named Idaho Cobalt Belt, which is another good place to go looking and developing mines in for a company that's called First Cobalt. Forward-looking statement. I'm a geologist. Enough said. Of course, there's going to be forward-looking statements. So who are we? It was mentioned that we started in 2017. That's really when the current management team was put in place. But it was actually founded in late 2016 by a group who saw a vision to create a company centered on cobalt itself. Sort of riding the wave of several other companies that had come on stream to take advantage of rising metal prices and increasing demand in the cobalt market. Through the year of 2017, we've become the largest cobalt as far as directly exploring for cobalt exploration in the world, and that again that's based on a market cap basis. We're the largest landholder in the cobalt camp itself, and we started an aggressive exploration program that's there, and I'll talk a bit about that through the talk. But we also do have the only permitted cobalt refinery in North America. And it's the only refinery that is capable of producing battery materials. So a lot was talked about that in the panel discussion. So this refinery is capable of producing cobalt carbonate or cobalt sulfate, which is something that is quite significant into the quick access of producing the material that the actual demand is for. A little bit of the corporate overview on the right hand side that I'll let you read to your own leisure. I'm going to take that point that we've got copies of the presentation available in paper, and as said, I'm available for one-on-one engagements later this afternoon to talk about that. I want to talk about the good stuff about the rocks. Again, being the geologist, that's what we like to do. Again, the cobalt. Why cobalt is again the panel discussion addressed a lot of these things. It really is driven by the demand for cobalt that goes into the lithium batteries that are being used in electronic vehicles. All those car companies that are on the right hand side of the slide there have all had testimonies in the last year of how they are going to increase production. Companies like Volvo just even boldly going ahead and saying we will not produce a hydrogen combustion engine-driven car by 2022 type of thing. So that in the bar columns going across in years, that amount of cobalt that is going into EV batteries is just increasing more and more. I want to draw your attention just on the y-axis on this, and again, it came up a little bit in the panel discussion, but you got to look at what that quantity of metal per year is. So today, we're looking at about 100,000 tons of cobalt. In the base metal market, we're used to nickel, which is about 500,000 tons a year, copper 2 to 3 million tons a year. So the amount of cobalt that is produced and is being looked for, it is actually a very small amount. And so that penetration of increases is significant. But we're talking about small volumes that are in there. So the discussion again of can we produce amounts quickly, soon enough? The answer to that is yes. And so, small companies like First Cobalt who can get on the production chain by producing even 1,000, 2,000 tons a year is already making an impact into that demand. Should be noted, the largest company, Glencore, they occupy about half of that production. In itself, and all the other companies are really are a logarithmic scale below of that production. So the number of companies that are coming onto the scene is still not alarming from that point of view. And we with First Cobalt, we hope we are at the forefront of some of that. Again, I won't berate this. This has been talked about before. The DRC and China, they lead in the production of cobalt, specifically in cobalt that is used in the batteries. As far as mining goes, sort of the pie chart to the left, most of those resources come out of the DRC and in the southern province of Katanga, and most of that again is a byproduct of copper. So again, I'm going to draw the attention to most other companies that are producing cobalt as a byproduct. And again, when we look over to some of these other countries, if we look at Canada itself, all of the cobalt is sourced predominantly out of Sudbury, mostly out of our nickel deposits. And we got to remember that's cobalt becomes the fifth metal in those deposits. They're mined for nickel, they're mined for copper, platinum, palladium, and it's cobalt last. So changing any of those processing facilities isn't going to happen anytime soon. So not much change coming from that perspective. What we offer to the investor is we're offering a North American cobalt solution. I'll talk about the project specifically, but I am going to emphasize now that we are North American based. Our flagship in Cobalt, Ontario, is as introduced. We have 5 past producing mines. It's a historic camp. It was a historic silver camp, but with significant amounts of cobalt that's there, which is why the refinery was built there in the late 80s, and it was upgraded up until 2015 to when it was closed. And it's shockingly close to where a lot of auto production in North America is. And not listed on here are several other companies that produce the batteries themselves, that synthesize the batteries that are going to go into the EVs all through the state of Michigan. And so last month in March, we announced a merger with a company called US Cobalt. Regardless of the name, it's another Canadian, Vancouver-based company who have been working on the Iron Creek project in the Idaho Cobalt Belt. With that they're much closer to a resource. There's a historic resource from that deposit that had been worked on in the 50s and the 60s. And with the amount of drilling that was done last year and that's been continuing into this year, we expect to announce a mineral resource sort of toward the end of Q3, early Q4 from that. And again, with our Canadian Cobalt camp, a lot of that is at the exploration stage. But with the refinery, we have a lot of options toward early production that I'll talk about in a few minutes. Again, getting everybody on the learning curve of what is cobalt. So we talked a bit about total tonnages. If we think about grade, now these boxes and these calculations are completely just from what spot prices are at any given time. This isn't talking about recoveries or these kind of things. But so. Iron Creek, at 0.6% cobalt, that translates into an over 10 gram per ton gold deposit. So what would be considered a high-grade gold deposit? It gets close to 8% copper, which is a ridiculously high-grade copper deposit. And that's just to put this into a little bit of perspective. I know a lot of times you get people asking just, 0.5%, what the heck is that? But it actually is quite significant when it comes to the natural occurrences of cobalt. And again, looking at it economically, what it represents against some of these other metals. And so this is just a little bit of the metrics behind what will happen with this merger between First Cobalt and U.S. Cobalt. We expect the transaction to finalize toward the end of May, and merging the two companies gets us into a market cap of close to $400 million, and a share price just over $1. So let's talk a little bit about the cobalt camp. It started out in 1904, a classic Canadian discovery example of driving the railroad into the frontier countries, away from the Great Lakes, which is the center of Canada at that time. And discovering cobalt, but really the more significant metal at the time was the discovery of silver, which is also associated with the same types of mineralizing systems that are there. And so in that era, they produced over 600 million ounces of silver. A lot of it in very small underground mines that were hand worked. And the diagram, the historic diagram picture that's there, that is a picture of one of the veins. So in the center of that black and white photo is a very white looking vein. And so most of the silver cobalt minerals are contained in those kind of structures. So very visual, very easy to recognize. Mom, Pop, and their brother were all out mining at that time, and it really was Canada's first big mining boom and rush to northern Ontario. Peak production between 1919 and 1931, when silver prices were quite high. As World War II became imminent, the mine shut down just from the crash from silver prices. Cobalt, again, being associated with these veins, and yet at that time, no real use for cobalt. It was just basically thrown away. And even since that time, cobalt had never really been explored for in the camp. The focus had still always remained on silver itself. Most of the mining was quite shallow, really looking only at a few hundreds of feet. And I think the deepest one that had been closed in 1989, which was Teck Resources mine, is at a maximum depth of 250 meters. So a lot of this is very shallow. We went through a merger of property. Again, I think echoing a little bit what Nighthawk Resources was talking about consolidation. It's an explorer's dream. It's not just about acquiring land. It's not just saying, hey, we got a big backyard. We're already starting to explore it quite aggressively. And so through the summer, as this merger was becoming imminent, our team was able to get out onto the ground, onto the consolidated property that extends about 30 kilometers in length. And what we saw from that is, being a historic mining camp, a lot of textbooks have been written. There's a lot of descriptions of the different types of ore, but it was always a similar theme: high-grade silver, calcite veins, like I shown in that historic photo before. As we got ourselves around the camp, we started realizing there's quite a lot of mineralization diversity. Quite a lot of it still dominated in high-grade vein style mineralization, but we are recognizing more disseminated style and more stockwork style veining that had not really been talked about previously, and associations with other metals as well. It had always been known, as I've said, about silver and cobalt, but there's also appreciable amounts of nickel that come with these deposits, and in particular areas also copper, zinc, and lead as well. that comes into play. And so what this diversity gives to us is actually are different opportunities for small high-grade deposits as well as larger low-grade deposits in the more disseminated styles of mineralization, or places where the veins are actually are concentrated. And that's really what we're starting to see in our drilling that we've been doing. So last year in 2017, we drilled about 6,500 meters in about a 4-month program, all focused on the first asset that First Cobalt had acquired, which was Keeley Frontier. So the diagram in the bottom right-hand corner that's in there is a series of veins that had been recognized and mined over a 2-kilometer strike length. And the program was really just to get an idea of what the mineralization would look like. As I said before, this was all mined for silver, so I could count on probably one hand the number of cobalt assays that actually existed in the mines. Again, a lot of done by visual mining, and no drilling at the time. So in 1910, 1920, it was actually cheaper to dig a hole than it would be to drill one. And so in this area alone, on these mines, there was 10,000 people that had come to this area to mine. And so a lot of the initial program was really just to reestablish what do the rocks look like, what are the structural characteristics that we can see. And so we've been very much focused on a geological approach to the whole exploration program. Exposure is quite good, and so mapping is also a very useful tool to us. So these are some of the results that we released last year of broader styles of mineralization, areas of higher grade as well, again where areas were clustering. And so within that 2-kilometer strike length, we've identified three areas now that we're starting to focus in on that we will be drilling and have drilled in part now in 2018. And again, coming at cobalt grades of 0.12, cobalt grades over shorter widths of over 1%, and again what those significance are. And of course, being in a silver camp, we do have instances of high grade silver in our case. And so in the cobalt camp, again, our focus will be on the metal cobalt, but silver will probably factor in quite well for the economics down the road. We like to see that we are harnessing innovation. So we're using historic maps and work on the ground to really get started building our 3D models. Interesting again that yesterday the panel discussion was talking exactly on innovation and modeling, predictive mapping type of thing, and we have started putting these models together to sort of get us into I guess that opportunity of using sort of predictive targeting or AI to do that. But not only that, but we are funding research through Laurentian University, the Merck Center of Research, to advance the ideas as fast as possible. So in 2018, it's a quite aggressive drill program that we planned. We raised $30 million at the end of last year, and part of that, about $7 million, will be spent on about 26,500 meters of drilling. And the intent again this year is to get across the entire property to test the various targets, the different mineralization styles, and what the opportunities may lie toward, where are the best places where we can develop and develop the resources that are there. And that's augmented, of course, by a lot of surface mapping. We're doing downhole geophysical surveys as well as soil geochemistry in some of these areas that are have been less explored. And more recently, we've been drilling in our Cobalt North area, and we released results at the beginning of March. In an area we're quite excited about, a high density of veining. So on the geologic map that's there in the upper right. All of the red lines on there are historic silver veins, and what we believe we found is a parallel structure that had not been tested in the past, that we did recognize through our 3D modeling and mapping. And so we're seeing some short intervals of higher grade, but more importantly, wider widths of decent cobalt grades and silver grades in there. And I'd have to say, more importantly, if you have a look at the photos of the drill core, no obvious single veins that are responsible for the mineralization. So a structural style that is a lot more amenable to bulk, to more bulk tonnages, and eventually what we would like to see is open pit styles of operation. And we've got good copper, lead, zinc that goes with that. A couple of quick words on our refinery. So it is a hydromet facility that was refurbished in around 2010, and it closed its operations in 2015. And it was specifically built to process ores around the cobalt camp. And so the cobalt ores are, as many of the other North American cobalt deposits, are arsenic rich, and this facility is actually specially designed to handle the high arsenic, and it's fully permitted to treat and store the higher arsenic type ores. So the processing and everything is all in place. That's a photo from back in November. It's a reasonably new facility, and it is pretty much just ready to go. A look on the inside. It can be seen on the left. It's right now that's in its current structure. It's on a big facility from that stretch of the imagination. So it is in a lot of ways ready to go for sort of bench scale metallurgical studies and understanding the flow sheets at a much larger scale, I should say, than bench scale itself. And just recently, last week, we issued a press release that we've been talking with a few companies about getting a better understanding of how to expand that refinery to more realistic production values levels and what it would cost to do that itself. What is all around the camp? The upper right photograph is a photograph of crushed ore, but all around the camp, as I said earlier, is ore that had been thrown away because it was cobalt rich and didn't bear silver. And so there's been various studies that have been done, on the order of hundreds of thousands of tons, or even up to 1 million tons of ore that is available around the camp in these surface piles that are there. And on our own properties, we've started doing representative sampling of what the grades of cobalt would be inside of that. And so the photo on the bottom there are pails of some of the samples that we had collected. So each that particular pile there is about 3 tons that we've actually are separating into 3 different batches to send to different places to look at ore sorting style technology. Again, can we get rid of some of the waste and identify where high grade ore can be to improve grades. The infrastructure is quite good. Cobalt Ontario is part of a larger community of about 15,000 people. So Trans-Canada Highway goes nearby. Rail power is also close by. A few words about our new Idaho Cobalt Belt project. Why Idaho? The U.S. is a major consumer of cobalt. A lot of that is more on the steel side of it, and in the next few years that will continue to grow from the EV electric vehicle perspective. And yet they only produce about 0.6% of global cobalt. So the Americans are quite interested in developing their own resources that they are consuming. The Idaho Cobalt Belt is quite well known. The U.S. Geological Survey, especially with this interest in global demand for cobalt, has done some quite recent work and looking at various historic resources and prospects in the area, and looking at about over 15 million tons of cobalt in this belt, which also contains copper and contains gold as well. It has one major former producer called the Blackbird Mine, and that was several small companies in Noranda more recently in the 1980s gave it a hard go to reopen that mine. But this belt has been more or less dormant in the last 40 years itself. So a blow up of the belt, which is the area in blue. This is the geologic distribution that's there. So it's quite large. All the various points are looking at other various companies that are in the area. The belt is quite active in itself for cobalt exploration. For Iron Creek, the infrastructure is already in place. There's 3 underground adits that were put in place for bulk testing. And those have been rehabbed, and U.S. Cobalt has been utilizing these to do more sampling and for underground drilling. All the mining patents and exploration, all the mining patents are in place, and there's a much larger exploration property that goes around that. I'm going to just skip over this really quickly, other than just to say the historic resource, which is not 43-101 compliant, comes in at about 1.3 million tons, short tons of 0.6 cobalt and 0.3 copper. The drilling that's gone on in 2017 was really to reconfirm those resources, and a new resource estimate will come out this year. It's a massive pyrite body, much different than what Cobalt Ontario is, and right now the mineralization had been known to trace about 800 meters, and the new drilling confirms that. So this year, 15,000 meters of drilling, and those are the sticks in red that are there. Outlined in black are the zone of mineralization itself. What drilling is done in 2017, so the no-name zone is the bulk of the mineralization of that 1.3 million tons. And what the drilling has done this year is to identify and further extend mineralization in the footwall. And some of the footwall zones are actually wider and actually of equivalent grade as to that no-name zone. So we're quite optimistic on the next resource estimates. So where does that leave us? That leaves us sort of in a 3-tier look at what is First Cobalt. We wave the flag of being a North American centric company, as opposed to being sourced in the DRC or in other areas. And it's more importantly, I think, because it is closer to the car manufacturers themselves. We have a fully permitted refinery that's ready to go now, that can take our own feed in the terms of this mine material that's now at surface, or any other feed from any other company that's there. We're an exploration company. We're quite aggressive. Between the two properties, we'll probably spend close to $15 million in aggressively exploring if those are significant resources to move us further. And so, thank you. And that's it.
Thank you.
Sorry.